Okay, so let's dive into something that probably caught you off guard. I mean, when you think low prices, you think Walmart, right?
Absolutely. It's kind of their whole identity.
So hearing headlines recently about them announcing pretty significant price hikes and closing down facilities, it feels, well, a bit unbelievable.
Yeah,
We're talking stores in places like Lincolnwood, Plainfield, Homewood, and two out in San Diego.
right. And for a company that's always expanding, always focused on that low price point, hearing about closures, hearing about big price jumps, it's definitely a jolt.
It really is. It feels like it flips the script on what we expect.
And this isn't just, about where you buy your bananas or the price of a toy. It feels like it signals something bigger, something fundamental shifting within the American retail landscape.
Exactly. And that's why we wanted to do this deep dive today. We're trying to unpack the really complex forces driving Walmart's recent transformation.
And what it tells us about the broader American economy right now.
Yeah.
We've been digging through, recent company reports, financial disclosures, things executives have said, commentary from analysts, trying to get to the core issues.
So our mission today is really to get past those initial shock headlines. We want to figure out the powerful pressures at play. And yeah, import tariffs, they're a huge part of this story.
A really big part.
And explore what this actually means for you, whether you're, seeing the higher prices at the checkout, maybe worried about your job, or living in a community where Walmart is a major, major employer.
It really challenges that ingrained image, doesn't it? Walmart as the ultimate American retail giant built purely on everyday low prices.
Totally. These recent announcements feel like a moment where that whole identity is being, I don't know, stress tested.
Yeah, definitely.
So where did this story really gain traction? What was the main trigger that seemed to speed everything up?
Well, a major catalyst, based on the reports we looked at, seems to be a new wave of tariffs imposed by President Trump.
Right. And these weren't just small tweaks, were they?
Not at all. The data we saw shows these tariffs initially spiked dramatically. I mean, up to a staggering 145% on some Chinese goods.
Wow, 145%.
Yeah, before settling at 30%, which is still, very significant.
30% is still a huge jump in cost.
Exactly. And think about Walmart's business model. It's all about huge volume, but with incredibly thin profit margins on each thing they sell.
Razor thin.
So when your import costs suddenly jump by 30%, or sometimes even more, you can't absorb that across millions and millions of products. It's just not feasible for them.
And the executives were pretty direct about this, weren't they?
Oh, yeah. We saw CEO Doug McMillon described as delivering a, quote, sobering message. And the CFO, John David Rini, was reportedly very blunt about the fact that widespread price increases were basically unavoidable. They were coming.
They even put a timeline on it, right?
They did. Price hikes were expected to start hitting shelves by June 2025. With potentially steeper jumps anticipated by July, which is, unfortunately timed right when families start doing their back-to-school shopping.
Oh, man. That's tough timing. And it wasn't just the big-ticket items either.
No, that's the thing. Reports indicated everyday staples, things like bananas, avocados, baby gear, were expected to see, quote, significant markups.
Wow.
While electronics and toys, they were facing even steeper increases.
That Barbie doll example you mentioned earlier really brings it home.
It does. Reportedly jumped from $10.49 to $14.99.
In just 1 week.
In just 1 week, according to the source. That really highlights the immediate impact.
Yeah, it definitely does. And that kind of immediate price effect, it really underscores the disconnect you sometimes see, right, between the political talk around tariffs and the actual economic reality on the ground.
Absolutely. And we saw reports detailing President Trump's reaction to Walmart's announcements.
Potentially is.
Pretty characteristic, you might say. Combative, insisting Walmart should just eat the tariffs.
Just absorb the cost.
Yeah. Sources mentioned him apparently fuming behind closed doors, even floating the idea of pulling government contracts from Walmart. And there was also that fiery Truth Social post demanding Walmart absorb the costs.
Okay. And did others in the administration echo that?
It seems so. Commerce Secretary Howard Lutnick reportedly took a similar stance, basically saying companies should just bear the burden themselves.
But economists pushed back on that idea pretty quickly, didn't they? According to the sources.
They did. They were quick to counter, making the point that tariffs are essentially import taxes.
Right.
And taxes that, someone always pays, whether it's the company, the customer, or, usually some combination of both.
They don't just sort of evaporate.
Exactly. They don't just vanish into thin air.
So how did Walmart respond publicly?
Well, they stood their ground. CEO McMillan reaffirmed their commitment to U.S. jobs. That was clear.
Okay.
But he also emphasized the, quote, harsh reality of retail's tight margins, basically saying, look, we can't just swallow costs of this magnitude.
And that led to some PR fallout, it seems.
It did, according to the reports. Despite Walmart having, deep ties in communities all over the country, some of President Trump's base reportedly started labeling the company unpatriotic.
That's interesting.
And the sources contrasted the situation with previous tariff targets, like Harley-Davidson or GM.
How so?
They pointed out Walmart's unique position as a national retail anchor. The implication being, if even Walmart, this massive company so focused on low prices, is struggling this much with the tariffs, it sends maybe a different, more widespread kind of signal about the impact.
That makes sense. But what's really fascinating, as you mentioned, is that the price hikes we saw, they were just the tip of the iceberg, right? This was part of a much deeper shift happening inside Walmart.
Exactly. It wasn't just a reaction. The reports suggest they were already re-engineering its global operations to survive.
So not just a knee-jerk thing.
No, this was framed more as a major strategic overhaul that maybe the tariffs accelerated rather than caused entirely.
Okay, so how did that play out? You mentioned sourcing.
Yeah, you can see it really clearly in how they approach sourcing.
Yeah.
While we were all watching the price tags go up, Walmart was reportedly, quote, quietly executing this fundamental shift in where they get their goods from.
Moving away from U.S. suppliers.
Significantly. Shifting orders away from the U.S. and instead investing heavily in suppliers in places like Vietnam, India, and Mexico.
Huh. So much for Made in USA initiatives.
Well, it seems like those kinds of initiatives were sort of superseded by what the sources called tariff-proof foreign-based logistics.
Interesting phrasing.
Yeah, and they even got into details like redesigning packaging, swapping out aluminum for fiberglass on some products, specifically to dodge import duties.
Wow, that's specific. And automation played a role, too.
A big one. They dramatically accelerated their automation efforts, putting more robotics and AI into stores and warehouses.
Which, on the surface, just looks like normal retail innovation, right?
Yeah.
Keeping up with the times.
Right. But the sources described it also as a tactical response, a way to deal with rising labor costs and that tariff-induced margin shrinkage we talked about.
So using tech to cut costs because the tariffs were squeezing profits.
That seems to be a key part of the strategy described.
And how was this whole strategic pivot received?
Well, it definitely generated different reactions. Critics, according to the reports, felt it was a, quote, betrayal of Walmart's Americana image.
Arguing they were abandoning their roots.
Exactly, abandoning that sort of foundational identity.
But the view from inside the company.
The executive perspective highlighted in the sources was pretty clear. They prioritized one thing, survivability. Meaning that trying to maintain large-scale domestic manufacturing under the intense pressure of these specific tariffs was reportedly seen as just too risky, a financial minefield, as one source put it.
Okay, so let's talk financials. How did this all look in their earnings report, say Q1 of 2025?
Yeah, looking at those first quarter 2025 financials really underscored the whole situation. The reports painted a picture of, quote, resilience laced with warning signs.
Resilience how? Revenue was up.
Revenue did look pretty good, yeah. It climbed to $65.61 billion. Apparently helped quite a bit by strong grocery sales and their e-commerce growth.
Okay, so top line looked okay, but that wasn't the whole story.
No. Profitability, quote, took a hit. Sources indicated that, yeah, they managed to beat analysts' expectations on profit, but...
But how?
Largely through really aggressive cost-cutting measures and also by stockpiling imported goods early before some of the worst tariff impacts hit fully, not necessarily through what you call genuine retail strength.
I see. So propping up the numbers through operational moves, not just pure sales growth.
That's the picture painted. And the executives, McMillan and Rainey, were reportedly quite open about it. They stated pretty clearly that the tariffs were eroding profitability.
That car seat example we saw mentioned.
Yeah, that was striking. Reportedly, a Chinese-made car seat that used to cost around $350. Now retailing for over $450.
Over $450.
Yeah.
And the sources warned of similar significant price hikes looming for things like strollers, electronics, seasonal goods, stuff like that.
And it's important to remember Walmart wasn't alone in raising prices, right?
No, definitely not. Other big companies like Mattel, Procter & Gamble, they also raised prices due to tariffs and other cost pressures.
But Walmart's impact is just bigger somehow.
It's the sheer scale, Their sheer scale amplified the impact. You've got over 3,600 stores, 150 million shoppers walking through them every week.
Yeah.
So when Walmart makes these kinds of financial moves, the decisions just reverberate across the national economy in a way that's different from almost any other single company.
Okay, so how did investors react to all this? Profits taking a hit, but revenue, okay, big strategic shifts.
Well, initially, the reports say investors kind of flinched a bit, understandably.
But then it seems they pretty soon recognized that Walmart's push into automation, the overseas sourcing shift, the AI strategy, they saw those as necessary, as lifelines for the company's future financial health.
So they saw it as a survival strategy, basically.
It seems that way. But that leads directly to this critical trade-off that the material really highlighted.
Which is?
While these moves might stabilize profits for the corporation, it's, quote, not without consequences for Main Street.
And that's where it really hits, I think, for a lot of people, right? The real impact on American communities.
Exactly. We're seeing consumer confidence slipping. And those reports suggesting 75% of Americans are blaming tariffs specifically for the higher prices they're paying.
Yeah, you hear that frustration.
And Walmart's big strategic shift. Maybe you see it less as the company just abandoning places and more like survival under unsustainable conditions brought on by that tariff pressure.
But the effects are real either way.
Yeah. Oh, absolutely. The effects on communities are described as undeniable. When a company the size of Walmart changes course like this, small-town America feels the jolt.
What kind of specific impacts were detailed in the sources?
Things like families potentially losing work hours or even jobs, losing that stability. Distribution hubs downsizing, local suppliers who depended on Walmart suddenly finding their contracts dropped, regional truckers hauling fewer loads because the sourcing points have changed.
And it hits rural areas particularly hard, doesn't it?
Especially hard. In many rural areas, Walmart isn't just an employer, it's often the largest employer.
Right.
So these kinds of changes, they ripple far beyond payroll. They can start affecting local housing markets, funding for schools, even healthcare services. It's all connected.
And the shift to overseas sourcing has knock-on effects, too.
Definitely. Those smaller U.S. manufacturers, maybe family-owned businesses that built themselves up supplying Walmart, if those contracts disappear, they could face really difficult futures, maybe even closure.
And what about the new types of facilities, the more automated ones?
That's another key element, the investment in what Walmart calls these next-generation models. You know, the more tech-heavy stores, the big fulfillment centers.
Yeah.
Reports suggest these locations just require fewer workers overall. They're leaning heavily into online-first operations.
Which could mean?
Which carries the potential risk that the more traditional, often rural store locations could end up being sidelined over time as investment flows towards these newer, less labor-intensive models.
Okay, so pulling back again, looking at the bigger picture here.
Yeah.
What does all this signal, how is it being discussed, say, in Washington?
Well, we're seeing reports that lawmakers are definitely raising alarms about these trends in development.
And economists.
Economists are also weighing in, warning about potential further actions. Like, if President Trump were to threaten new tariffs, maybe this time on companies moving work overseas as a response to the first tariffs?
Sort of tariff feedback loop?
Kind of, and the warning is that could just deepen inflation and stall growth for working Americans even more.
It feels like it creates this really difficult, almost impossible choice for working families. A stark dilemma, as the sources put it.
Yeah. Either you pay more for the goods you absolutely need,
Or you potentially lose the jobs and income that allow you to pay for anything at all.
It's a tough spot, and it's really key, I think, to see Walmart's shift clearly. It's not like they're physically packing up and leaving the U.S. The stores are still here, obviously.
Right.
But the underlying sourcing strategy and spirit are shifting. And that seems undeniable based on the reports.
And the original goal of the tariffs, to revive American factories.
Well, according to the analysis we reviewed, that hasn't necessarily happened. Instead, the policy seems to have pushed companies like Walmart to essentially seek shelter abroad, reduce headcounts, and automate aggressively.
There was that one line that really stuck with me from the material.
Which one?
Walmart has confirmed a harsh reality. Slogans can't override spreadsheets.
Oof. Yeah, that cuts right to it, doesn't it? It highlights the economic pressures.
And this pivot by Walmart, it's so significant because, well, they're Walmart.
Exactly. As the sources suggest, it may be just the beginning. It forces you to ask that question. What stops others from following if the biggest name in retail is looking overseas to survive?
If they're doing it, maybe others feel they have to as well.
Potentially.
So this whole transformation, it really forces us to confront some critical questions based on the analysis we've seen.
Like what?
Like, is Walmart's move fundamentally a necessary business adaptation to these really strong external pressures, like tariffs? Or is it, as some critics argue, a kind of betrayal of American workers and communities?
That's a central tension.
And should government policy even try to force companies to absorb massive tariff costs? Or is that just, an unrealistic expectation given how global business works?
Another tough one. No easy answers there.
And maybe the biggest long-term question: what are the real, lasting social and economic costs when automation increasingly replaces local jobs, especially in those towns that rely so heavily on retailers like Walmart for employment?
These are absolutely vital questions, and exploring them, using what's happening with Walmart as a case study, is crucial for understanding where American retail might be heading.
Yeah, and what that means for the economic engine that supports so many communities across the country. So, zooming back out one last time, Walmart's evolution here, it really feels like more than just one company adjusting its strategy. Based on the sources we explored, it's being presented almost as a bellwether.
Like a signpost, yeah. A signal for the nation's broader economic direction.
As these forces, tariffs reshaping global trade, automation redefining work as they continue to play out.
The ripple effects seem pretty clear. They're poised to touch really every corner of American life, from the literal money in your wallet when you shop
to the economic stability of entire towns, especially rural ones.
The road ahead, as described in the material, feels a bit foggy. There's uncertainty.
But one thing seems clear from the analysis. That long arrow we got used to of seemingly endless cheap goods and stable, easily accessible retail jobs, that feels like it's increasingly under threat.
Yeah, the ground seems to be shifting.
So maybe the final thought to leave you with, based on all this, consider Walmart's current direction, not just as one giant company adapting to survive,
but maybe as a stark preview, a warning sign, perhaps, of a potential future.
A future where even the most familiar, most American-seeming brands might find themselves prioritizing global survival strategies, sometimes over their historical, local roots.
And what could that ultimately mean? For your own community, and just for the everyday things you rely on buying day in and day out. Something to think about.